Alright, looks like we are live. Happy Easter, happy Good Friday. I don't know what today is in the scheme of that 3-day deal. So hopefully the stream comes through okay. So many things to learn with the new setup. So I switched my internet providers, obviously, since I moved, or maybe not obviously. And then my old router was fine with everything I owned, and then now my new router only can handle up to 10 devices. Figured that out today, and everything was nuts. And I was like, I can't even do anything, because now every silly little thing in your life has to be connected to the Wi-Fi, including your washing machine, including your vacuum. It's ridiculous. So I feel like just like basic normal stuff nowadays, you're gonna have like, I don't know, at least 30 things between all the phones in the house, all the computers in the house. That's already 10 with you 2 or 3 people. And then you have cameras and doorbells and washers and dryers and everything else. It's ridiculous. Hey Chad, have I ever used the zebra strategy? I don't know what the zebra strategy is. What is it? Let's try zebra option strategy. I'm looking it up actually. Yeah, just that's the first thing that pops up on Tastyworks when I googled it. What is it though? Let's see. Okay, that's too much of an overview. That's too much reading. Is there a what's the basic setup for it? I love that there are so many strategies, and I watch so many videos and read so many things, and yet like today you're like zebra strategy, and literally I was looking up a bunch of them the other day, and there was a like legit a Christmas tree, or I think it was a Christmas tree, and then like upside down Christmas tree strategy or something like that. Never heard of it. Unlimited upside potential. Well, that could be any call. I mean, like literally you could buy 1 share of something that's technically unlimited upside potential. But what's the setup for it? Like what are you buying? I mean, if I just know what you buy and or sell, then I know what it is. Zebra option. Maybe if there's just an image of it, I can see what it is. I don't know. You know what? I'm going to research it and I'll do a video on it. How about that? And I'll do one. Are they like, okay, so you're selling, oh, okay. That makes sense. Is there like a specific type of underlying they do it on, like just like an ETF or SPY or something like that, or just anything? I'm excited to learn the new one. I'll try it out. I mean, what I really still need to do is put some time into calendar spreads, because I think that's something I'd like, but man, I wish time was unlimited, you know? That's where I want to get to. As soon as I can get enough coming in or something, like, who knows? I don't know, next month I should start seeing like tens of dollars from YouTube, so that's exciting. But maybe someday then I can just sit and research and play with all these strategies, because oh yeah, I was looking at SPY, lots of less capital, because you're okay, so you basically have a spread and a call, and then you're using the call that you sold as to like basically pay for two calls. So pretty much out of pocket are the calls, I would assume. I don't know, but I'm gonna put that on my to-do list for sure. I get excited about doing a lot of stuff, and then I just straight up run out of time. I still owe my my VA a bunch of pictures and stuff. That's why you keep seeing the over and over and over again same thumbnails, at least from me. If you guys didn't know, I have a VA that works on that stuff, so like I'll put one thumbnail like when I'm just uploading real quick, and then you'll see it change. I don't know, you probably don't see a change, but I'll see it change like a day or two later, or half a day later, when she actually makes something that's pretty decent. What price would I try to buy my put spread at if I'm rolling it out? Joe, what's your situation like? Because put spreads, you're selling them, and generally to roll it out, so if you're out of the money, you should be getting paid for that. If you're in the money, then you're gonna have to pay something. But essentially what you're gonna want to do is, when you're looking to move it out, you're just gonna want to make sure that you're moving it out to a place where you're comfortable. That's the biggest thing. So like, whether or not you have to pay a lot or a little, or you get paid a lot or a little, doesn't really matter to me. I like to get paid if I possibly can. When Tesla was first dropping and I had a lot of them go against me, I rolled them out far enough to a point, and this was when they were still out of the money, but it was going down pretty good. I moved them out far enough to where I could collect something. Like, I just didn't want to pay for it. So whether it was $5 or $100, it didn't really matter. I just didn't want to pay for it. And that's why I ended up with a lot of them sitting at the end of the year. But like, if you have something that's expiring next week and the stock moves against you quite a bit, you're not going to be able to do that, most likely, just because there's not enough extrinsic value left in it. So yeah, if you let me know what the spread is, I can tell you what I think about it, like what I would do. I was dropped near sell strike price, got a little nervous. Can use the roll-up strategy to save the trade. Yeah, what's is it a Tesla one? Dude, if it's Tesla, then we just have to wait until Monday. Because I don't know if you know, but they beat everything. They beat delivery expectations, they beat production expectations, and I think their production isn't necessarily true, because they showed no Model S, no Model X production, and we know there's refreshed Model S's sitting in their parking lot unless they're all screwed up, and maybe they're not quality controlled enough to be considered produced or something at this point. Right? I have not. Oh, I see. Yeah, so we had a pretty good drop. They're the ones that basically, like, if Bitcoin goes up, they go up, right? I think. Isn't there like a Bitcoin futures? Yes, there is. So they're at 60, and I've actually never looked. I've actually never looked at the Bitcoin chart on Tasty, or not on, or Thinkorswim. So, and it's also weird because on Thinkorswim, you get to see the volume during the week, and then like when the market's closed or open, but you don't get to see that. So let me see. 4-1. What is this? 4-1, 645. So is it gone? So Bitcoin, like if I'm seeing this right, so Bitcoin's shot up, right, since quite a bit. So like Monday, in theory, it should have a pretty up day. But if it is based on Bitcoin, I would definitely roll that out, because I think long term Bitcoin is going to be, I mean, it's just like one of those things that inevitably is going to go up unless something crazy happens. But I think even the crazy stuff almost can't happen now, because basically because policy is the one thing that could change it, right? Like if the United States or whatever said, okay, no more Bitcoin, it's illegal to use. But policy is always dictated by money. Like you look at every president that's won elections, they're usually the person who basically spent the most campaigning, even lobbying. So the people with a ton of money are always going to lobby for the outcome they want. There's nobody that's really getting hurt. I mean, banks are getting hurt a little bit, but now that big corporations are buying into Bitcoin, and as more and more become like a big portion of their balance sheet starts to have Bitcoin in it, they're going to pay lobbyists, and lobbyists are going to affect the policy. So I don't see that long term going down. So if basically that's what they're based on, 100% I would just roll it out. That must actually have some pretty good premiums to it, right? Because they're pretty dang volatile. Jeez, could have picked that up for 85 cents. Could have picked it up for 85 cents a year ago. Good Lord. No wonder I hear so much about it. It's so crazy. There's so much crazy stuff that goes on, and you don't ever have time to research it all. That's actually a nice little, let me make sure. Can we see? Oh, we can't even see this. Let's get over here. Riot. Expiration is on the 9th. And the sell 50. Oh, so you're sitting right in there. Yeah, but like you said, that's probably too close for comfort. And it's one of those things that probably will inevitably go up. I mean, that's a huge wedge if I've ever seen one. I mean, that's a monster. How do we do it on there? That's a huge wedge. I mean, and that thing's gonna break out 100%. Yeah, so alright, that's exactly what I would do. I would just roll it out. I mean, you don't even have to roll it out very far. It looks like it could. Depends on how the bounce is, but it looks like that wedge is, I mean, it's getting higher lows and lower highs until there's a breakout that happens. So if you end up rolling it out a couple weeks or something like that, I think you're in pretty good shape on that. What are the premiums like? Are they pretty good? Oh, by the way, we did this early today because I'm getting my first vaccination today. Getting some Pfizer in my arm, and it's actually pretty funny. So I wasn't going to do it at all. I was just gonna wait as long as possible because I don't think it's super important. And one of the girls, so I went with somebody else who got theirs, and one of the girls there, she's like, "How come you're not getting yours?" I was like, let some older people go first, or frontline workers or whatever. She's like, "Are you chicken?" I was like, "No, I'm not chicken. Sign me up." So today I'm getting one, or my first one, even though I don't really want it. I don't even want extra shots, but I guess it's probably a pretty good one to have if I have to have one. I can never get it filled, still having issues when attempting to roll it out. Are you trying to roll it out for the same strike price? I would think it would be pretty difficult to not get it filled, just because that's a pretty popular stock. So that, I'm sure they're bought and sold pretty often. Are you like, whatever the cost is? So if you're trying to roll it out for credit, just put a little bit lower amount and you should get filled pretty quickly. Like if you see me do it all the time, I'm just like, all right, well, the average is 24 cents or whatever, $24, and I'll put 22. Let me get filled and move on with my day. Or if it's for a debit, just put a couple bucks higher, because at the end of the day, $2 or $2, $3, $4, $5 to save your collateral. I guess you have $50 collateral, but a couple bucks to save it, and for you to be comfortable with it, I think is well worth it. It's too volatile. Yeah, but the volatility, like the fact that it's up and down, unless they're just crazily widening the spreads once it's entered, if it goes up or down, like, it should help fill it pretty quickly, I would think. I don't think I've ever played Riot. No, probably not. Otherwise, I'd have a little bit better knowledge about what they are. You got the Janssen Thursday afternoon and got wrecked. Is that Janssen? Is that one of the vaccines? I know, like Moderna. Johnson and Johnson. Did you get you got the single shot guy? I heard I could get those at Costco. Kind of wanted to do that, but I already got this scheduled. What effect did it have? You just get like sick, tired? Everybody else that I know that got it, like one of them, I can't remember, like the Moderna or the Pfizer, they either got wrecked on the first shot or the second shot, like not sleeping at night or anything. Yeah, J&J vaccine. I know. Well, we all got to do it, right? I guess, or at least 70 or 80% of us. Dang, wait, so you got it Thursday and you're trying to eat, like felt like food poisoning or something, or what? I guess at least you got the one shot and it's over and over. Or, like, at least it's over. My speed and skills on Robinhood are nuts. Yeah. Oh, and I'm calm. Yeah. Well, I have to act calm in the videos, right? not freaking out. But believe me, this was actually on, Tesla. What was it? Just like this week, it was funny. Where was it? It was After Hours. Okay. So this was Thursday morning, right? And like everything was super good for Tesla. I need to clear out all these stupid little studies. Let's remove all the studies. And I just happened to wake up like at 2 a.m. and it was like at 6:38 and then dropped to just 6:28, which wasn't huge, but I didn't expect it to go down. I was like, oh my God, come on. But I just been playing with it and using it daily, like all the time. So it's just like playing a video game. Like, I don't know if you guys play games. I do. It's like knowing what your skills are, like on every single letter and all the controls for video games. first couple times, like, yeah, and then you jump from that and then try to go use like Tastyworks or Thinkorswim, and then it's all complicated all over again. But thank you, appreciate you. Why don't I sell put instead of put credit spreads? Great question. Because selling a put, a single $600 put on Tesla needs $60,000 worth of collateral, and I don't have very many $60,000 available. But if you'd like to send me some 60,000s, I will be happy to play it. But that's pretty much all it is. So for the price of one $60,000, I could play 60 $100 spreads, and yeah, I'm not going to collect as much collateral or as much premium, but I'm going to collect a pretty darn a good amount, you know, and I could sell them like way farther money. Like I could play 450s, 440s or something like that and still end up pretty ahead compared to just selling a put. And it doesn't allow me to do so many plays too. But if you wanted the safest of safest, that's what you should do. If you just played put credits or just sold puts, I mean, then you're a winner both ways. If it's a stock you want to own, you end up with the stock or the money, and both of them are good. No appetite and couldn't keep toasting. Oh man, I hope I don't. Hope I don't get wrecked off of it, but we'll see. I would love an excuse to not go to work, but I want to be excited for Monday for Tesla's reaction. What's my move on Tesla's earnings tomorrow? I can't make a move tomorrow. I have to wait till Monday. I even have to wait till Monday to see what the effect on their production and deliveries are going to be. So what's my move? It depends on how it opens up. Like if it spikes way up, like if it moves, what are we at anyways? If it moves like $60 or something, like pre-market, which it very well could, I might not do much because I do have a ton in play. Like if everything goes up, I was looking at it, like it could be, like if it hits 7 sums, it should be a $30,000 or $40,000 day for me. But if it lags, like if it's slow and it kind of pulls back a little bit, then I'll probably get into some debit spreads. I'll probably or out of the money calls on weeklies. And also depends on the overall market too, because bonds did creep up after hours, which is that's what's been dragging tech down this whole time. Bond rates. Around 9 hours after I got the shot, I started running a little fever. Then a couple hours later, it felt like a really mean flu for around 12 hours. Ugh. You know, that's been the only good thing about this last, good Lord, like year or something. We've all been so distant. Like nobody's gotten the flu. Like I legit haven't been sick forever. And like nobody calls in sick with the flu anymore. They're either like, the only thing I have ever called in about was, okay, somebody I know got exposed, so I don't need to be around people, and so I'll take 3 days off until whoever I knew got tested or something like that. But like legit no flu. I kind of enjoy that portion. Actually, I really enjoy that portion. I hate the flu. You just can't get anything done. You feel worthless, and then just if it's like really bad flu, like really bad, man, that nothing can make you feel good. You just want to sleep, take medication, hide under the bed, turn off all the lights, especially if you get the bad headache. Joe, what's your play on Tesla gonna be, or are you gonna play it? We also have like if it was to happen, if those numbers were released during the week, and while the market was open, it would have had an insane reaction. But now, like 3 days, I don't know. We'll see what the market thinks about that coming on Monday. Because every time like something bumps up, it usually pulls back a little bit. And same thing, bad news, stock will drop crazy, and then everybody's like, okay, we overreacted. This isn't as big a deal, and it came back up a little bit. Credit spread for cash secured puts. I just want to make sure. Manish, does that make sense though? Why just do the spreads? I mean, we can actually like, let's see what one costs. Let me grab this, get out of the zero strategy. So, like, even selling out the money, let's see, this is, go a couple weeks out. I'm always a little bit slow on this just because there's even a month out. Like, man, those are some good monies, aren't they? So $2,600, $2,600. Let's say if for $60,000 worth of collateral is what I could collect, which is awesome. That's a lot of money. I don't mind having an extra 60 or an extra $2,600. But so for the same amount of collateral, what could I open up? 10, 12 of something else. So even if I was to do something, you know, some like 450s, what would this be? 450s. Oh, that's only $10. Might have to find a better example. Oh, and when it closed, all these were jacked up too. So I found a bunch of them that were screwed up in mine. Let's go 500. Only 40 cents. This might be jacked up though. 480. Yeah, maybe I just need 60,000 and I can do that. But then I can only make one play. But I've been selling them a lot more aggressively. So been selling up there. So $2. So that's, I mean, I could sell 12 of those. Is that right? Saturday math divided by $500. Like, oh, I could do 120 of them. Okay, so I could collect 24,000 if I played the 600s with spreads. But it is way more risky because then I can lose it all if I don't roll them out. I was thinking 12. I forgot a zero. So I could play 120 spreads for the price of one put credit spread. I think Tesla is under some pressure depending on what happens on Monday. I might be looking at Neo spreads for higher gain. Joe, dude, you know what? This drives me nuts. I was looking at this. Actually, that's one of the things I had up here. There's no difference in the stock between, like, for me, there's a huge difference between Tesla and Neo. But look at this. Let's add the study. Compare with custom. So on Thinkorswim, you can do an overlay of another stock. So the chart with the candlesticks, that's all Tesla, and the purple is Neo. And there's like legit almost no difference between the two. It's insane. I mean, the amount of divergence here is so little. Whatever you can make on Neo, I think you can make on Tesla. Although, you know, Neo's at a lower price point, so you could do more there. So, hey, I could afford to sell some cash-covered puts on Neo a lot better than Tesla. But it's insane because Tesla has so much more, like they have so much more market than just automobiles, and NIO is just strictly an auto manufacturer. Tesla has the solar, the battery. I mean, the big news with them providing that huge battery farm for Apple, that's huge. Even the announcement from the White House as far as that huge spending bill for the U.S., all those are going to be for United States made vehicles only, and like U.S. EVs. So like Tesla benefits hugely from those, and NIO doesn't at all. But is the more I look at it and the more I see this, and I've stuck this overlay on there a few times, it drives me nuts. Like, why is there no difference between these two at all? I mean, let's look at the 20-day. I mean, I guess NIO's pulled back a bit more, but overall, I understand why stocks of similar type experience it, like, because what's good for the EV market is good for the EV market, what's bad for the EV market is bad. But I feel like there should be some divergence there, which divergence is just a fancy word for I guess difference, right? It shouldn't, like right now they look super coupled. Like there's portions in here where they seem to really move together, and divergence is they're just moving independently. And I know they shouldn't move completely independently. They're both growth, but two vastly different companies, not customers. How did you balance reinvesting your profits from credit spreads with buying shares and reinvesting to have more collateral for spreads? Also, how did margin help me grow my accounts? For a long time, I just made it a rule that half of my money, basically, when I sold a credit spread, I would just automatically go to withdraw and withdraw half of it. And I did that for quite some time. And very initially, when I started doing it, I had some really good just straight up wins, and I wanted to take money off the table. Right? I started with $575. So, like, when I over the first few months, when I got some really far out of the money puts and calls that hit really well, I just took the money off the table. Like, I sold those. Those were things I bought for like pennies that ended up paying hundreds. So I just withdrew a bunch of that, and then I have auto purchase for a few stocks that I wanted to own, and I just committed to doing it. Every once in a while I would buy it, but I didn't have a set amount except for the half. And I did that for, I don't know, 5-6 months or something like that. I would sell a spread. If I got $120, $60 was getting withdrawn, and I would do it every single time. I would withdraw it. Like, I would do the spread, go to withdraw $60, which is actually kind of cool. Just seeing, like, your normal checking account, just getting deposits. Here's $60, here's 200, here's 1,000, here's this and that. But it was super important. Like, I didn't want to I didn't want to risk much. I didn't want to risk like everything I had just made. I'd just feel like an idiot. Like, even if this went to zero, like I said, I've grabbed $50,000 and I have a bunch of equity. So that's a really good question, though. Margin helped me because I'll use margin for my credit spreads, like, no problem at all. I also did. I think I've showed it a couple times on M1. I have a dividend account that's all it does is pay dividends. And I think overall it pays 3 point something, like 3 point, I want to say 3.6. and M1 allows you to borrow against it. So I was like, well, if I'm getting 3.6, M1 charges 2%. I'm just going to withdraw. I'm just going to take money out of the margin and stick it back into the account, because then I'm still net positive, like a 1.6 overall. I know everything can pull back, but over the long term, we're going to be good. I would love to do a live feed. You asked me, are you planning on doing a live feed for Tesla's earnings Monday? Dude, I would love to, but I've got a super full day. I have a super full day every day, honestly. I have a full-time job. I do this during the day. And then I just bought a house too, so that's just so much. That's research, buying appliances, installing a whole bunch of crap. I hate it. I'm finally like fully actually moved in, but I still haven't got, I still have like what do you call them, blinds to order and stuff like that. And then this morning I have a jacuzzi tub that ended up leaking, or I think it was this morning, and it ended up leaking. So downstairs in the kitchen, water came through. So all right, now I got to spend a couple grand on getting that fixed. All right, just to confirm, to help get my credit spread rolled out, I would buy at a lower price. That's one of my major issues with getting it filled. No, you can move it out sideways. Okay, so it's weird because it's just like totally visual to me now. So the more that you want to move it down, the more likely you're going to have to pay. If you move it sideways and it's out of the money, you should be able to collect something. And if you move it up in price, then you're almost definitely going to collect. But you should be able to move it sideways. You can't. What you need to understand is by moving it down, that's safer for you. So that means that's less likely to happen, which means you're at less risk, and you're always rewarded for taking risks. So since you're putting yourself at less risk, that should cost you something. But on the other side of the equation is the time that you're giving it. So those kind of balance it out. Like what? I wonder if I can look at one. So you had a 50 on the 9th. I wonder if I can do it and see what that would be. Right, blockchain. I'll bet that'll be good Monday, is my guess. And the 9th, so you sold this guy. Oops, you don't want to do that. You sold this guy. Nope. So slow on this. So right now I expect it's reflecting like 30 cents. I don't know how much collateral you initially collected, but let's look at what that is a week out. So that was 30. So 25. So it looks like, why does it want to charge you? It looks like you're gonna. I think the chain must be screwed up, like it did for Tesla at the end of the day. So that would actually charge you $5. I think it might just be screwed up right now. What am I looking at? Oh, I'm looking at calls. Jeez. Sorry. I'm just super fresh to options. Puts. All right. So 21 cents. Okay. And we look a couple weeks out. Yeah, so I don't know where you're trying to move it, But it looks like even moving it out like a couple weeks, you might be collecting $1. If you're trying to move it down, it looks like you'll probably have to pay for it. Because these are still 60% probability. Let's see, so 50, 35, 50. Yeah, and all the chains are going to be screwed up right now, honestly. Like, I looked through my whole list of Tesla credit spreads, and I mean, they were screwed up to the tune of $4,000 or $5,000 right now. So yeah, if you move it even, you should be able to collect a little bit. I mean, like anywhere from 2 to 15 cents or something like that. If you want to move it down, depends on how far. So like when you're trying to move them down, if you don't want to pay for it, you're gonna have to move them out of ways. Like that's just the way it is. Like you might have to move them out a couple months. But if I had that spread on that stock, which just from the way things are going and the way Bitcoin reacted afterwards, I wouldn't move it out very far. I would roll it out a couple weeks, probably the same strike price, and then see how it reacts even this week. What's it showing you like when you're trying to roll it? Like, is it just showing like $1 or $2 or something like that? Because the only thing, I never have trouble getting filled on almost anything, like unless something is like moving and I'm chasing it, like stock is ripping and I'm trying to buy a call and I just don't enter it fast enough. Or if I'm trying to get filled like right between bid and ask. Robinhood's definitely greedy. Write it. I look at right on the big chart. Look at that. Riot follows Neo. I guess that's what we just get with the broader market move. How long have... Okay. Everything. Look at that. All the growth. Everything has almost followed the same thing. So I guess at least future, like S&P futures were up end of day on Friday. So if Riot's moving along with all that, that should be pretty good. Yeah, 404, man. That's crazy. All-time highs. We're still not done with this pandemic. But, you know, just whatever they're asking for as far as what you need to pay or what you should receive in credit, just go to that area where you have to enter the actual fill price and manually enter something a little bit less than what they're trying to pay you on the average, and you should get filled pretty quickly. That way you don't have to spend all day doing it too. But man, yeah, Monday's gonna be an exciting day. I'm super stoked. We'll see. I mean, it's got to be at least a $10,000 day, but I think a $20,000 day is pretty cool. At that point in time, it was way too volatile. I could not get filled. I did approach 2-1 strikes, which made me a little nervous. Yeah. Yeah, plus you don't... I mean, obviously we can't predict the future, or else we'd all be ridiculously rich. Was that just on Friday? Oh, and it bounced off that 51. I see. Then it bounced back just fine. Are you still up on the spread though? Unless you opened it at the beginning of the day, but I don't see any other point where you would have opened it. Let me see. Guess you could have opened it up a couple weeks ago. Did I use the wheel strategy much as you were growing your account? I did some, and even though I like the wheel strategy as a strategy, I don't like it. And the problem is, the biggest problem with the wheel strategy is all the stock I own I like, and I don't want to sell it. Most of it has the potential of going up. Like, I could have done it, I don't know what I would do it on. Like, I could, because ideally when you're doing the wheel strategy, when you're selling your calls, you're selling it pretty close to the money in order to actually collect a decent amount of premium. And I don't have anything that I want to get rid of, except for BNGO. That was the only one that I wanted to get rid of. But other than that, it's just not the case. I could probably sell closer to the money on AT&T, but that's not much premium to begin with, and I'm pretty much just holding that as, that's just my high interest checking or savings account basically. I think it's difficult to find like the perfect stock that you want to do that on, because you want to do something that at least moves a little bit so you can get a decent amount of premium, but you're okay owning and you're okay losing. And I find the okay buying part easy, so I'll sell cash covered puts, no problem, on stock that I love. But when it comes to selling calls on them, I sell them so far to the money, like I'm never getting them called away from me. Yeah, like AMC, I think would be fantastic. I haven't been following the memeness of it recently. I actually sold I had a bunch of AMC. I sold it like before it went up so much. But I think that would be an awesome one, because you never know when that's being like falsely propped up by basically being a meme stock or whatever, trying to short squeeze everything. And then you could at least collect a decent amount of money. And then if you're doing it and you get it sold, no problem. I don't think that's going to get squeezed up like 200 like GameStop did. Yeah, -$3 return total. Yeah, so Joe, I think Monday you're going to be good. I'll bet you'll be happy. But if you're uncomfortable, roll it out. You're probably going to collect very little though, it looks like to me. But of course the options aren't moving very much right now. Mostly for the premium to collateral ratio. Oh yeah. Yeah, because AMC's probably has some pretty decent premium on them, huh? If I owned it, I probably would. But that's just if I look at, where is it? Oh, it's not over here. It's over here. The stocks I own, and I do sell, I guess technically it's the wheel when I am selling calls on things, but I think for an effective like money making, it's like I should buy 200 shares of a certain stock and then just sell that call at the money, like right then, like just be down to get rid of it. So like And a lot of these I bought when everything was super low, like Tapestry. And then I just love Tapestry. I'm like, to me, it is super cool to own the stock that makes Coach instead of buying a Coach bag. And then to look at all the people that put their money into buying Coach that they can barely afford, and I just benefit off of it. Like, I just love it. Can I give you some background on how I grew this account with such a small initial investment? All credit spreads on Tesla for the most part? Nope. So the beginning, my first few months is right in the beginning of the pandemic, and it's actually why I learned how to trade options, because I was like, I know there's a way to make money when the stock market goes down. I need to learn how. So like I think my company it was prior to the shutdown. It was prior to the shutdown, but I wanted to learn how to benefit from it. So my big gains, like going from that 500 to 30 or 50,000 or something really initially, were like SPY puts and puts on anything, Carnival Cruise Lines, Boeing, that were making major drops. So literally you'd be able to turn $7 into 170. It was pretty ridiculous. And then, so from that point, when I hit around, actually we can take a look. So if the chart, so I think I was up like $70,000, and that was mainly from just all that. And then I was just trading sideways, and one of the bad things about really good initial success is you think you're good. Kind of like going to the casino for the first time and you just win. You're like, oh, why don't I just spend all my time here? So I was like kind of more buying random stuff for quite a while. So I was trading, I'd lost back, let's see, so I was like at 75 and down to 60. So I'd lost back like 15. And then just trading sideways April, May, June for quite a while. And then that's when after playing with so many different strategies, that's when I found really what I liked was the put credit spreads. I just like that you make money up, sideways, or down a little bit. Obviously not down a lot, which we've seen. And then that's when I really started to grow it from there. So it's about 3 times what it was from that point, even now, even though I've taken a down day or down a couple months. So, but I expect using that same strategy, and I've taken a lot off the table, right? So a lot of it is into equity now, into cash. I've taken 50 grand out of the account from my initial $575, and so it's going to be slower growth, which is fine with me, but I expect to see that upside still. And those, like the plays I did initially, hopefully, I'll knock on some wood, but hopefully we don't see another crazy pandemic crash kind of thing. What were my big winners in the beginning? So SPY puts, Boeing puts, Carnival Cruise Line puts, and I had no idea. I would just buy them, and I would wake up and like, oh, cool, 10,000. Like, it was nuts. It was just surreal, right? It's just like those Wall Street bets YOLO plays. Like when they actually hit, it was like, holy crap. And at first I'd be stressed out when I'm down like $20 or whatever. I think my first actual stock purchase was 1 share of Trade Desk. And then I got, of course, my couple free stocks. So yeah, those are all winners. Like it's kind of like, so those were big winners to the downside because of those puts, and that was like you could have bought a put on literally anything in the whole market last year, a couple months ago, like February, March, and you would have won on anything. And then look at this past year. So like, just look at the SPY, right? For the last year, like you literally could have bought anything, and anything, they're going up. All right, Joe, see you Monday. Have a good weekend. Have a good Easter. But it's why, like, now you can find so many people posting things about this stock is going to 3x, 5x, 10x, whatever. But for a while, they were right. You could have bought anything. It's like, you look at what I'm holding, as far as like some of the stock in Robinhood. Like, I bought a lot of this just while it was down. So like Gap, it's not like, oh, Gap is going to be a 200% gainer, but it has been. MGM, Tapestry, Cedar Fair, that's just like they own amusement parks. So a lot of these, yeah, they were 100%, 200% gainers, but literally you could have done it on anything. So that's not I don't think that's the environment we're in anymore. So we're not going to be able to, so that's like not a repeatable part of what I've been doing. But I believe from June on, that's repeatable. And even though this part's ugly, but that's the whole market there. That's the whole market. So I'm expecting, kind of like this trend to continue here-ish. Obviously Monday is going to be a good day, but continue up like that. You're 100% following my strategy. I don't see where I can get rid of your kind of growth. Oh, where you can get my kind of growth? Yeah, well, that initial one, you're right. But from like June to now, so you can take that as bad as you want, from 260 down to 150. But also, I've taken a ton of that money and put it into equity, which is huge. So that's like, I've moved a lot of that to safety, and $50,000 to my bank account. But even if you take, I don't know, whatever, June, 9 months in, so do we like basically from 80 to 200, something like that. That's 150% growth, and 150% growth, a 50% growth in a year is amazing. It's like amazing. Like, hedge fund managers don't shoot for that. I mean, the S&P returns 7, 8, 9, 10%, maybe 14 on a fantastic year. You're gonna either have to take on a whole lot of risk or get lucky to be able to make those kind of gains. But that's why I'm sticking with what I'm sticking with. It's been successful for me, and I mean, we definitely have a long ways to cruise up. When I was looking at, let's see, how do we do this? My equity in a lot of these guys. So this is gonna kind of show like what my expected gains are here. Just, I think next week, maybe I'll be totally wrong, and we're not gonna hit 700 next week. But I feel like we'll have some pretty awesome upside, and I think Tesla's their earnings are going to be ridiculously good. But we should have, I mean, this is 1,000. Let's see, where are my bigger numbers? Yeah, 1,000, 2,000, 3, 4, 5,000, 6,000. 7, 8, 9, 10, 11, 12. And some other ones. Where are those other guys? 12. Plus the stock. So even that alone should be that's 12, 14,000 right there. Then I counted up Friday. I thought it was like a little bit more, but obviously you guys will see. But I expect a big day Monday. I expect a nice week. I expect a nice summer too. I think a lot of the fear is kind of gone when it's all nice and shiny, sunshiny out, and everybody's doing well. People are collecting dividends, getting your Coke and your AT&T dividends, reinvesting those. Yeah. So Riot, I don't know, but Palantir, I think that's going to have to be a long play. I want, I've said a few times, I want 1,000 shares of it. I think I'm getting there, and we're down on it quite a bit. We have 272 shares of Palantir, down $570 on it. But I think, you know, like this looks like easily $100 stock to me. But that's not 2021. That's 2025, 2024, or something like that. That's a 3-year guy. Why don't I use condors? Because I'm scared of the top side on Tesla. I'll use it on some stuff. And actually, let's see. Oh, I do have one iron condor on Tesla. This 500 870. But I'll play them on AT&T. See, I got 2 of those next week. Let me see. Is that my total return? I do though, but I'm just like with all these catalysts coming out, because we've seen Tesla go up $100 in a day. So where am I going to sell the top side at? That's the big question for me. I did sell, which expired worthless, an $800 call, my stock covered call on Tesla, and I have a 900 as well somewhere. I have a 900 call expiring 2 weeks out, and that's just going to get scary. I'm too scared to the upside. I just know the right catalyst, like the right announcement, is just going to send it skyrocketing and is going to blow the top off on it. I don't like to bet against the stock I'm long on, which it's not an iron condor stock. It's a moving guy. And then if you look at the premium that you get for the top side, it's pretty little. Like, you have to play kind of close to the money. And with the current action right now, I think it's found its bottom. You know, it could drop down a little bit more, but not hugely. So that's where I'm comfortable. The bottom I'm comfortable with. The top, I just don't know. Like, enough catalysts come out, and then all of a sudden it rockets past 1,000. It's going to blow the top off of those things. I don't know if it would come down. I mean, those production numbers, they're insane. They're fantastic, and I have a feeling earnings are going to be great because a few of the things that they've done, they've raised prices on things, and they haven't done that forever. They raised prices on vehicles. They raised prices on solar, which is one of their drags. I mean, they bought Bitcoin at 1.5 billion at when it was 30-some thousand. I don't know how that's going to factor into their balance sheet. They're selling credits to Volkswagen. They're doing this huge battery deal with Apple. There's been tons of other projects that haven't that aren't very publicized too. So they could blow that out of the water, and then that's it. That's my reasoning for not playing condors on those. Do I check the delta and theta before I make any trade? Nope. I did for a while. So once I got to know my Greeks, I realized I don't really need them. I understand. I'm like, I know what they are, but I just don't use those. I'm using just the price action. Like, where is it seeing bottoms? What are the upcoming catalysts? What is the news? And that's why I play this one stock over and over and over and over again, because I've gotten to know it so well. So it makes me very comfortable with it. It's like months ago, I would have not been holding. I mean, like, I have. If these are like to the losing side, I'm losing. So I have like 685s, 670s, 680s, and expiring in a couple weeks. But I knew about the catalysts that are all coming, so that's why I held those. and I know what the reaction to that is. I knew the difference. I expected a beat on the production and deliveries because of the difference between like what the market was expecting, like all the Wall Street analysts, and what anybody who really dove deep into Tesla's production, like what they were predicting. So I expected a beat. I didn't know how much it was going to be. Expected it in the 180s. So I expected that to be a positive catalyst. So this like Friday with it dropping just didn't bother me at all. For Tesla, how do I pick the spread strike? Depends. That's such a fluid question. So I've been doing it differently a little bit, like this last month or so. So I've been way more aggressive with it. Ever since it went above, I think about 600 or so, I've been nervous. So if you like look back on those videos, I'll be like, I'm opening this, but I think Tesla's too high. This is scary up here. This is getting scarier. And so at minimum, I would try to get my strikes like $150 out of the money, and 4 to 6 weeks out. And I was doing that for quite a while. Which was really good because it allowed me to roll those things out. And so I was able to save most of that collateral. I did end up closing it after Tesla just seemed like this never-ending downtrend, which I wish I would not have. But oh well, you learn. And so now I've been very close to. I've just been sticking right under where the money is because I know we have these catalysts coming to the upside. So I mean, I've had 600s that I've opened up every time I see a downturn. Did I still have some? Nope, I moved those up. Yeah. So it's not a very, very specific amount. I'm just looking right now for short term and moving them up because I know these catalysts are coming. It's really difficult to explain if you haven't been doing it for a while, but I'm going to be able to make gains on those spreads fast with the price action compared to if they were weeks out. So if they were still 4 weeks out and I opened up those spreads, and let's say Tesla opens up at 700 Monday, all these ones that are expiring at the end of the week, I could close all those out and take almost all of my profits. Where I have ones that I rolled out to maybe June or September, all those ones, because there's still time for Tesla to roll back down, they're gonna still be pretty expensive. So I'm not gonna make as much gains on those as I will on the shorter term ones. So I've been wanting to keep everything much shorter and much closer to the strike price. So I've been rolling a lot of them up too. I wish there was a simple answer for that. Like, I picked this delta at this time. The only thing I've been trying to do a lot more is waiting for the stock to drop before I open anything else up. My unwritten rule right now is I want to see a $30 drop before I open up anymore. I don't know when we're gonna see that anytime soon, but we'll see. We'll see Monday. I'm excited to see just how everything reacts on Monday. I feel like it's just going to run up. I hope it doesn't run up too quickly. And I think Monday morning, upon opening, my guess, we'll see what happens pre-market. I think we'll see a bump up when the market opens, a slight pullback, and then it'll just trend up for the rest of the day. So what I would love to do Monday is, depending on how wide the spreads go, as far as the bid and ask, when I see the pullback on Monday, I'll probably open up some debit spreads or just buy naked calls. And actually, those naked calls from last week did really well. Wish I would have bought some more. Wish I would have bought some more at the end of Thursday. And I guess beyond that, I'm just looking for something in my mind that's a good amount of premium to the collateral, right? I don't want to open up something, risk $1,000 and get paid $20 for that. I want $100 or $200 for that. So I want my $1,000 collateral to be able to actually do something worthwhile. And with the volatility and the downtrend, I've been able to do that pretty well. I think I opened up another one. Did I open one up on Thursday? I think I did. I think I opened up maybe this 590 or this, oh, maybe the 630. Where does it show? I don't even know where it shows it on this when I did it. But I know on those drops, that's when I grab them. So, what's up, Logan? Logan, wish me luck. I'm about to go get my injection, my vaccine. Yeah, I gotta get out of here too. I gotta go head to the doctor's, get my arm ready. You gonna dip and take a shower? All right, yeah. Glad you're feeling better, man. Logan, I hope I don't need luck. I hope it's just like a shot and I leave. I've been following Tastyworks stuff and deploying your ideas using Theta numbers and trying to get 40 to 50% of the width of the strike for premium, averaging around $500 a day for the last 2 weeks. Dude, nice. $500 a day for the last 2 weeks. That's super awesome. Have you been playing like a bunch of different underlings? Yeah, yeah, Rob that's leaving to go take a shower, he just ate for the first time in a couple days. He got super sick. He got the Johnson & Johnson, so I'm getting the Pfizer. Crush GME. I know two people. I know a dad and a daughter who made $900,000, like literally their first 2 weeks trading. Popped up YouTube, said buy this AMC. They did it. The dad, I think he made 600, and the daughter made like 300 something or 200. I don't remember. It was like close to $1 million between those two. 2 weeks trading, like literally just downloaded the app. My girl, like two of my girlfriend's customers. It's crazy. What do I think about iron butterflies? I think you have to get pretty lucky for those things to hit like exactly how you want them. The J&J is the single shot. I haven't either heard too many people, and I didn't hear about much reactions either, but I kind of wanted that one because like one shot and you're done. But I think, yeah, I talked about it earlier. So I wasn't going to get one. I was going to wait until super late. But I took my girlfriend to go get hers, and she got hers. And the lady's like, how come you're not getting your shot? And I was like, oh, you know, because I wanted to wait. I was like, you know, we probably should get the older people done and the frontline workers and all that. She's like, are you chicken? Is that the problem? And I was like, no, I'm not chicken. Sign me up. So that's why I'm getting it. Because some lady called me chicken. Damn it. All the other vaccines I heard, like either people get sick on the first or the second shot. Like I can't remember. Moderna is one of them. Pfizer is the other one. My girlfriend just had like a sore arm. So we'll see. Now she's getting her second one today. Tesla is 100% ripping on Monday. 100%. Unless, I don't know what could happen, but Tesla has to rip on Monday. Unless like the 10 years go up to like 2.5%. Unless the bonds go insanely like super against us, and the broader market and everything's fallen, maybe, but yeah, should do pretty well. Alex, you're welcome. Well, Tesla was bleeding, but I think it was more like it popped up the day before. It's like when something rips up, you have to pay for it the day afterwards. Like, it just can't continue to go up. Look at every single pop and every single time a stock like drops, right? It's usually an overreaction. I mean, it's like at that point it was like FOMO. Like, everybody's like, oh, it's going up, better buy it, better buy it, better buy it, and then it cools down. That's what's going to happen. What I think Tesla fell down from 900 to 590 before it turned around, it was because the PE ratio is ridiculous, and the broader market was selling off too. I think it was too high. I mean, it was too high. Like, legit, as far as like my thought as I was opening up those. I know I recorded it several times as I'm opening up the put credit spreads. I'm like, God, it's too high, it's too high, it's too high. I knew it was too high. And everybody had to pull their money out of there to buy GameStonk. And then as soon as it starts dropping, everybody else falls suit. Oh boy, I made all this money, I better sell the stock now. And it's going down. Sold the 650 call on Tesla for 416. You sold, like you had one. You bought it for oh man, that would have been good. I don't only just use credit spreads, but mainly I actually, like, if I look at everything, hey, there's a couple iron condors. I sell, like these are mostly, they're either poor man's covered calls or they are they're stock covered calls. I think I actually have, let me see, do I have a debit spread in there? Like another iron condor. It's kind of a variety store in there. I'll say mainly though. I have some leaps. Look, I have these leaps on Snapchat, DraftKings, Dropbox, and I have debits, some 790, 800 debit spreads, 690, 700 debit spreads on Tesla. So, no, I play all sorts of things. So it just depends on what you want to do, which is pretty cool because there's basically a tool out there for anything. Whatever you think is going to happen, there's a tool for it. Just getting to know them all, and the bigger thing is not just knowing like what they do and how they do it. It's learning how to manage them. That's the bigger issue with them. It's like the calendar spreads that we all want to learn, right? Like, opening them up is no problem. It's the adjustment that you really have to know, and you have to understand it well enough to where you're comfortable just going in like, boom, let me make this move. Okay, now I'm back to a comfort level. And that's why I haven't played them. Did you sold your 650 call against your shares? Is that what I'm reading? I thought you had bought it and then like you sold it. Oh man. Oh man. Ouch. Yeah. What are you gonna do? 650. Oh, I'm sorry. That's why it scares me, man. You are brave. A 650 call. I'm like, my calls that I sold are 800 that expired this week, and I have a 900, and even a 900 makes me worried every now and again. Yeah, hopefully you can roll it out and still get some good preem. Yeah, I get it. Yeah, you have 100 shares and sold 650 against it. Yeah, that's just a 650 call against for Tesla right now with all these catalysts coming out is scary. Those things might get called away. You're dumping your... Oh, you had a 695 call? Oh... You guys are so much braver than me. I just treasure my Tesla shares so much that I'm scared to sell any call, especially one that low. I don't know. Sometimes I look at the level 2 data and go, yeah, there's no way it's going to creep up there, but just, it's like selling, spread is much better. at least you don't have a lot of shares to lose. What was I gonna say? Yeah, I don't remember. But that must have got you a lot of premium though, selling that. I'm just like, let me take my $80 or whatever, because I still think I get like 80, 100, 150 bucks or something like that for selling them up at 900. Do you guys run a screener to find good stocks, or just trade stable stocks? I just trade ones I know. Sometimes I trade ones I don't know. I realize I don't know them, and then I want to get rid of them. That's what happened with BNGO. I bought shares because everybody was talking about it, and then I kind of checked myself and went, I realized I don't know what this company does. I couldn't explain it to anybody, so I wanted to get rid of them, and then I immediately sold the covered calls on them, and hoping to get rid of them. I should have sold them a little bit lower, but I didn't. But might as well get paid to get rid of them. I like Butterfly and Condor on T. Yeah. I wish they paid more, but I like AT&T is like the perfect stock to do that on. I agree. I love when you say you learn this the hard way. That's, man. I had this on a fortune cookie a long time ago. It was like a smart man learns from his mistakes, but a truly wise man learns from others. And then I also think just the cost of education, right? Like, all education is expensive, just going to school and whatnot. But like, that can become very, very expensive when you're saying you learned the hard way, and that's a lesson you never ever forget when it costs you a bunch of money. I'll bet you could roll that 650 out though and collect a bunch of premium. I'll bet you could roll it up though. I would think, just because the premium's gonna go nuts. But 650, I would be scared. I don't even know, what did it close at? Oh, yeah, that's gonna be expensive. Way too high. Wonder. So you sold it 2 weeks back. Okay. Was it? So you must have sold that 650 when it was down to like 550, going no way, and then you had that 2-day rip or something like that, or did you sell it like actually after the rip and collect a ton of premium, like after? No, because you probably wouldn't have sold it at 700. Yeah, you had to have sold it when it was down like in the 500s though. 550, 570 or something like that when you sold your 650. And that's what scares me about the iron condors or call credit spreads on Tesla, period, because it does that $100 in a day. And if we don't see that Monday again, I'll be shocked. Like, I don't know. People are taking their wild guesses. I'll guess, just because you have to have one, I'll guess, what was it at before? I think we see, like, within minutes of opening, 720, 730, that'll be my guess. And then a drift up. Didn't move that much. Was that 580? Yeah, so that was just that very, very, very low point. Yeah, everything was not looking so good right about there, huh? But I guess we're talking about the future. We don't know. I don't know. We'll see how the market all reacts Monday. But any last questions or anything before I go get ready to go get injected by a virus? Wish me luck. I gotta mentally prepare. I'm scared of needles, I'm scared of injections. The only thing that is helpful is that my girlfriend got it. They had a super good experienced lady there and she didn't feel it, so that'll be okay, I hope. Well, if that is it, I will see you guys Monday. Should I buy Tesla stock? Yes. All right. You got the Pfizer yesterday? Since you just saw I was live, do you have a last minute question before I take off? We'll give it a minute. Yeah. I'm gonna be crying. I should videotape myself. At what percentage do you typically roll your options over at? I don't have a typical, so I'll maybe have to answer that next Friday or next Saturday, because it's a lot more explanation than I really have time for now. Or you can watch earlier. I think we talked about that, because everything is pretty fluid with me. Cool. Sore arm. Oh, and 100% Tesla's going up on Monday. Good earnings, good production, good deliveries. All right, love you guys. Thank you. See you guys Monday. Hope you guys have a great Easter and everything else. We'll talk soon.